The following is a presentation of TFNN. So let's go to Rick in Longwood. Rick, thanks for holding. Thanks for calling in.
Well, thanks for taking my call this morning, Steve. And you're right, it is a beautiful morning.
Oh, man, it's a beautiful. That's why we live in Florida.
Yeah, it sure is. And, I'm one of your subscribers to your alert service.
Yes, thank you.
And, thank you. I'm one of your very satisfied customers because you're making me money.
I love
That's
it.
the bottom line.
I love it. I hope you're a moon lover. I hope you're a moon lover, too, Rick.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely love your presence here. I treasure your presence, folks, and my outcome today is to help you to become a better money master. But more importantly, folks, it's always laying the tile, laying the groundwork so that we can each lead an inspired life. Because lead an inspired life, folks, to me, that is what it is all about. Now, my personal outcome each and every day is always to improve my skill set. I hope that's the same for you. And let's go take a look at one of those tools that we use to just simply, increase our skill set. And that's the tool, folks, I call that the power of ratios. Makes a lot of sense, doesn't it? Now, the power of ratios, folks, can be explained in what I would call one simple sentence. If you do something often enough, you'll get a ratio of good results to bad results. So think about it. We're going to talk about Fibonacci ratios today, expansion and contractions. We're going to watch those occur in the marketplace. We're going to take a look at expansions of A, B, C, D patterns. Those are ratios out there. And everything it is that, quite frankly, you do in your life, you can go take a look at. If you're in a business, and you take a look at sales calls or whatever it is, services, products that you sell, it's really all about ratios. And so if you do something often enough, folks, and that's when it comes to trading, it's why I teach expectancy. What you want to do, folks, you want to keep in mind that once a ratio starts, folks, it just simply tends to continue over time. That's why I teach system expectancy. That's why you should know the output. You should absolutely know the output of your trading system. What is your system expectancy? It's why I utilize Fibonacci expansion and retracement. I don't know why those ratios work, but when you lay them on chart patterns, what you see them happen time and time again, folks. And when you think about it like this, all of our brains are functional. And what that means is that, we're all using ratios. If you're cooking, you're using ratios. 1 cup of this to one, if you're making some Tiger butter brew, you can't put a whole stick of Kerrygold butter, in 1 cup of coffee. You're using ratios. We are always using ratios. Our mind, our brains are trained to function like that. And folks, when you really realize that, that's how you understand how you absolutely turn the ordinary in what I'll call something extraordinary out there. It all starts with what? Potential, action, results, and belief. We covered that yesterday. If you didn't catch that, you can always catch the show archived on TigerTV on Channel 9. That's this show. And if you are listening on the radio, thanks so much. We're going to take a look at patterns out there. You can always catch the archive of this later on today, maybe this evening, maybe over a cup of Tiger butter brew out there. It is PGA Tour Thursday, and terrific Thursday. They're playing up at the John Deere Classic out here. If we take a look at our futures market, first you had the Dow was up and down and all around yesterday. We're going to take a look at the ES Mini. Why? Because we're looking at the future right now. We can take a look at the past in just a little bit. Yesterday you had the S&P finish flat after quite a roller coaster day, so it was a theme park ride. Maybe we're in store for another theme park ride out there today. Had the jobless claims come out this morning. I guess there were 26,000 people that didn't claim for unemployment. Now, of course, and so the estimate was about, 371. It came in at 350. Of course, what did we have going on last week? Just kind of curious. July 4th? Holiday week? Possibly some people just didn't get to claiming their unemployment, folks. Maybe that's a little bit behind the drop. You have the futures market didn't really respond that much. In fact, I think it pretty much sold off in that 10-minute period when the jobless claims came out. Right now you've got the Dow futures off about 70 points. The ES Mini trading out at 1326.75. That's down 10 points. The NASDAQ off 17. The Russell 2000 down 6. The story across the world, other than over in the Shanghai. The Shanghai was the only index up, of the 5 or 6 that we take a look at. You had the Shanghai was up 10 points last night. That was up 0.5%. Otherwise, you had the Nikkei off 1 4/10%. The Hang Seng off 2%. The IBEX this morning is down 2%. The DAX off 0.6%, and the FTSE off a full percentage point. But let's go take a look at what happened yesterday. And we're talking about the power of ratios. I'm talking about the power of ratios. I think that's one of those things that you need to just simply recognize and have in your toolbox out there, because it's already there. So I just simply want you to be able to accentuate it, to turn it from ordinary to extraordinary, folks. So when we take a look at yesterday, where we were at, what was trading on out here, we were taking a look at a consolidation range. The top of that consolidation range yesterday was really at the 7:10 a.m. time frame on July 11th. That was yesterday. That was in at the 1342.50 mark. What was unfolding in front of our eyes was an A to B equals CD down. Now, we didn't really see that unfold until about 2:10 in the afternoon. What happened at 2 o'clock yesterday? You had the release of the Fed minutes out there. So that finally broke the consolidation loose. When it broke the consolidation loose, folks, what it did was it completed a 1 to 1.272 A to B equals CD down. Now, we're taking a look at a 10-minute chart, because I want to just simply, on a 10-minute chart, I can show you how these patterns are happening. These breathing patterns are happening on a continuous and ongoing basis. Now, it did a 1 to 1.272. Look, 60% of the time you're going to do a 1 to 1 A to B equals CD down. The other 40% of the time you're going to do something different. Now, how do I know that it was, and all you have to do is become a master of that C to D leg. That's really all you have to do. You let the market do 75% of the work. You do the last 25%. That makes becoming a master a whole lot easier. Now, you don't know where it's going to stop, but the market will always give you a signal. And what we're looking for when the market is moving down, we're looking for a bullish signal. Well, which of the hammers? I just gave it away. I can't even, which candle's out there one of Steve's favorites? That's right. It is the hammer candle. And as the market was making a 1 to 1.272, that price projection, 13.29. At 240, you actually had the market pushed down to 13.2775. And what was that candle that it created right there, folks? One of Steve's hammer candles. And what was that next candle? That very next candle, Steve's bullish engulfing. At that stage, the market was giving us clues that the lows for the small time period until the next A to B equals CD was going to form. And you never know what that formation is going to look like. But it was telling us right then and there that the low was put in. It gave us the 2 candle signals. It came down to one of those ratios that we know works. A 1.272 A to B equals CD expansion. What did the market do? It simply bounced up from there. Where did it bounce to? Well, folks, it's all about the ratios. If you just simply go from your A point to your D point out here, so we're going to go from the high that came in at, we were looking at 7:10 yesterday morning, to the low at 2:40, and we'll go ahead and put that retracement ruler up there from the high to the low. What you're going to see is the 0.786 is where the market bounced to. Now, as it was creaming through, and this is on a 10-minute chart, folks, here, as it was reversing the losses for the day, you can see that this wide-ranging bar right here, as it came through the 0.382 area, came through the 0.618, told you it was headed to the 0.786, didn't even give us an indication if that's where it would stop. But as the market came into the 4 p.m. time frame, the 0.786, folks, 13.39. Where did the market actually get? 13.39. Where did it actually get to? 13.39.50. It was actually 13.39.50 is really the price projection out there. Pretty cool how these work. Now, what happened then is now you have to wait for the exact opposite to occur, because what you did have, I'll go ahead and erase these lines here, what you also set up was another A to B equals CD pattern. In fact, this one was setting up a Gartley sell, because what did we do? We got to the 0.786 retracement, and we did it with an A to B equals CD. That A to B equals CD was very close to a 1.618. I'm going to go ahead and just get rid of a couple of lines out here, make it a little bit easier here for you to see. I think it will. Let's see if it does that. Yeah, well, actually, I didn't do that. Let's go ahead and let's do it the right way. Make it a little bit easier, especially if you are watching on TigerTV. So I can do this here pretty quick. 1.618, A to B equals CD. You'll see that it didn't completely hit that price projection. What you are looking always for is to be in the range. The actual projection of that A to B equals CD up 1340. What it actually got to was 1339.50. You got to love that, folks. Now, what you're then waiting for is you're waiting for a bearish signal. And you got a bearish signal. You got that bearish signal right here at 6:10 last night. Unfortunately, you didn't get the confirmation. That meant that you didn't really get the bearish signal, and you just simply had to wait. And you had to wait, folks, until you got the two confirming signals, and those came in at 8 o'clock last night. I wasn't in front of the computer system taking a look at it, but it came in at 8 o'clock last night, came in with a shooting star. Shooting star, small little candle out here, but the shooting star is the cousin of the hammer candle. It's just simply in reverse. And then what did you get with that shooting star? You got a bearish engulfing candle right here. The very next candle, the exact opposite of what we had when the market reversed to the upside. So what do you have now? You've got an A to B equals CD unfolding. Ratios, folks. The ratios, understand your Fibonacci ratios. That's how you turn the ordinary into extraordinary. We're in choppy marketplaces out here. You can learn how to trade. The reason why we like to use the futures is because you've got continuous trading. So you've got continuous A to B equals CD patterns that are going on out here. So now what we have is we've got a new A to B equals CD down. And have we gotten that bullish confirmation? No, we have not. Now, if you take a look at that new A to B equals CD down, what you're going to see here, we're going to start with our A point out here that came in. We're going to say at the high at 1339.50. We're going to use the candle from 5:30 last night. We're going to use as our B point right now. We're going to use the low that came in at 2200. So what's that? 2224 is midnight. 10 o'clock. The low out there at 1334 makes a little bit of a bounce coming into the midnight time frame when it gets up to the exact price here. 1336. Now, what kind of retracement is that? Pretty shallow retracement. Shallow Hal, as they say. That was a 0.382 retracement. That tells you that you're going to do more than a 1-to-1 A to B equals CD down. And as it's making its way down right now, so far what you've done is you've had the futures go to make a 1-to-2 A to B equals CD. This is on the 10-minute chart, folks. A to B equals CD patterns happen all the time. Fibonacci retracement expansion happen all the time, folks. Make sure they're part of your toolkit. 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Futures are down. King dollar's up 14 ticks right now. Gold trading back $17 out at $15.58. Silver down 1 7/10%, down 47 cents, trading out at $26.54. Just lost the where 26.54. Yeah, 26.54. Light sweet crude down $1 out at 84.77. And if we take a look at we're into earnings season right now. It was kicked off by Alcoa on Monday. I believe it was Monday. And so yesterday after the bell, you had Marriott International release their numbers. Marriott right now in the pre-market down 2%. They are trading out at last trade just fired off here at 37.19. They closed at 38.03. You had Infosys Limited, INFY. They're the ones taking it the largest on the chin this morning, down 10%. They closed at 43.62. Their last trade just fired off at 39.12. In the pre-market here this morning, releasing numbers. Looks like we've got Progressive Corp, PGR. They're down 5%. That's off $1.11. They closed at 20.55. Their last trade firing off at 19.44. We've got what else here? Let's see. Anything else significant? Nova Gold, NG. They're down a full percentage point this morning, but that's really 5 pennies. They closed at 5.27. Their last trade firing off at 5.22. So not a big deal there. Commerce Bank, CBSH, off about 0.6%, down 23 cents. Closed down at 38.52, down, as I said, down 23 cents here so far. After the bell today, Google really going to be the big dog out there. And you've got Google, you've got Bank of the Ozarks, OZRK. They're releasing numbers as well after the bell. And then before the bell tomorrow, you've got J.P. Morgan Chase and Wells Fargo. So that'll be the focus in the morning. And that kind of rounds it out for this week's earnings that are going to be released. So, and I am wearing my USA Today, not the USA Today newspaper. Today I'm wearing my USA shirt. That is why. Because of King Dollar. Has to be because of the King, or at least one of the reasons out there. So you got King Dollar right now trading out at 83.88. What we have up on my screen here is the weekly chart. Now what you're looking at across the top here, that red horizontal line, you're looking at a triple top test out here. You're looking at the highs, the King Dollar trading all the way back in the August 2010 time frame highs. That high, 83.64. 83.64 was first tagged during the month of June. Got up to 83.67, closed back below that area. Did really a very shallow retracement. In fact, if we take a look on the weekly chart, from the swing point low, which would be May 2012, up to the June, we're looking at a weekly just a little bit beyond the 0.382 area. So, you know, as far as ABCD patterns, this area here gets broken. We can take a look at just on the ABCD pattern where it will go to, but we can also look at the left-hand side of the chart, and that will tell us something. Now, the week doesn't close till when? Tomorrow. So you get a close up above this, and you can take a look at King Dollar making a move higher. Where would it move higher to? Well, it'll move to the last time that you had a triple top test out there. When did that occur? That occurred really coming into the week of June 2010. You can see this black line that we've got going across here. Now, the first time that the dollar index was up at the $90 level, was really 89.25, was November 2008. You had the U.S. dollar index get in there both the months of March 2009 as well as March 2009. Now, in March 2009, what you had, folks, so this is kind of interesting. This is why you want to certainly pay attention to these candle patterns out here. What you had occur the week of March 13, 2009, you had a bearish engulfing candle. Right? March 2009 were our lows out there. And you take a look, you absolutely had follow through on that next week, and that set off the move higher in our markets, and it set off the move lower in the U.S. dollar index. Folks that talk about, the U.S. dollar being trashed certainly aren't taking a look at a chart here, because if you take a look at the lows inside the U.S. dollar index, in the recent year, it goes back to May of 2011. When you had the U.S. dollar index down at the 74.53. You're well off those highs, folks. And if you just simply go from the high on the weekly all the way down to the low, and that high being June 11, 2010, down to the low, what you can see is you've already done the 0.618 retracement. So it says King Dollar 85.82 if you get it close above this triple top area. That means if you get it close above, we can use either 83.64, I'd say on a conservative basis, you could use 83.67. You're traded 83.89 right now. But more so, if you go ahead and get rid of the retracements here, what you'll really see is it's really clear sailing all the way up to the high. When I say clear sailing, it's because there is simply no swing point, folks. The last swing point is out at the highs of June 2010, out at $89.10. That'll put some heat on markets worldwide for sure. When we get back, we'll go see how these markets are going to drop and whether or not they're going to pop, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow down 75, S&P's down 10, Composite down 14. Small caps off 7%, leading the charge on the way down 0.9%. To the upside, you got Vernetics Holdings, VHC, up 9% this morning. That's up $3 and change. SAP-AG, SAP, the ticker symbol, they're up 4% this morning. Merck, boy, that is one of the stronger stocks inside the Dow, folks. MRK, they're up another 4% this morning, up $1.80. Procter & Gamble is up 2.5%, up $1.57. Sounds a little defensive to me out here. Affimax, AFFY, up 12% this morning, up $1.46. Salesforce Innovation up $1.27. That's up 1%. Citrix Systems, CTX, they're up 1 4/10% out there. Fastenal, I believe Fastenal came out with numbers yesterday. They are up 2.5%, up 3. To the downside, you've got Infosys, INFY. We cover that in the pre-market. They're trading down almost 11%, down $4 and change. Apple right behind it, down $4.50. That's off 0.7%. Starwood Hotels, hot. Hot is not so hot this morning, or maybe hot because it's red, down 4.5%, down 2 3/8%. IBM struggling. We're going to take a look at IBM for sure. They're down $2.70 this morning. And Family Dollar Stores, FDO, down about 2 7/10%, down $2 out there. Now, I want to pose a question to you, folks. I want to pose this question. Who's weaker? Who's stronger in the market? Is the DAX in Germany stronger, or I'll just ask this way, is the DAX in Germany stronger or weaker than the U.S. market? Let's say the DAX in Germany compared to the S&P 500. What would you say? What would you say knowing everything around the world? Would you say they're weaker? Well, they're not when you take a look at the stock chart. When you take a look at the stock chart, folks, if you take a look at the DAX here right now, the DAX certainly pulling back a bit, down 50 points, down 0.7%. Right now, trade out at 64.0480. But take a look at what we're going to focus in on here. Is we're going to focus in on the date of June 29th. Wait, June 29th, because that's the date that they had the, the ECB, ESFS, and all the other wonderful PR press releases out there by, I'll come up with some good PR name companies out here, but I got to make sure, because I'm on public air, that I use the right ones. But let's go pay attention to the point here. The point is, take a look at that June 29th area here, and the DAX is really up towards the highs. The high of June 29th inside the DAX is out at 64.16. You're at 64.03 right now in the DAX. The DAX actually stronger than the U.S. Let's go take a look at the U.S. market. Let's go take a look at the S&P 500. June 29th, you've got the S&P 500 actually traveling right at or just slightly below the low of June 29th inside the S&P, 1330.12. You're trading right now at 1330.35. You got down to a low of 1329.90. So the U.S. market is showing more weakness here than the German market. Something to think about. Now, if we take a look at, let's actually take a look and see what the retracement is off of the lows going back to the June 25th low on the S&P 500. That was 1309.27 up to the high that was put in on July the 3rd. You can also see that you're below the 0.618 area, which that sets up that next level, 1323.30. So that is the next area of support. That is on the shorter term time frame. If we take a look at the longer term time frame, going actually off of the June 4th lows all the way up to the July 3rd highs out there, what we'll see is that the next area is really the 0.618 that takes you all the way back to 1308. That gets you all the way back to the lows of June the 25th out there. So the U.S. market right now showing that it is actually weaker than the market over in Germany. And if we take a look at, we haven't looked at the currency side. We've taken a look at King Dollar, but we certainly haven't looked at the Queen here as of late. So let's go do this. And what I want to do here is I'm going to just simply put this on a monthly chart so we can see what's really going on out here, try to see what's really going on out here. First, we're inside the swing point on the monthly chart going all the way back to June of 2010. Now, so it's the mirror opposite of what we were taking a look at on King Dollar. You can see that the actual swing point low on the euro is 118.754. Now, if we take a look at the longer A to B equals CD out here, what you would do is you would start at the highs on the euro going back to July 2008. Those highs came in at $1.60 and change. So let's go, that'll be our A point. Our B point is going to be, hopefully this is the B point, is going to be down here in October 2008 when it was down to the 123 area. Your C point is going to be up here, looks like, let's see, 151, 431, 150, yeah. So you're going to be taking like the month of November 2009. And A to B equals CD, a 1-to-1 gets you down to 114. A 1-to-1.272 gets you down to 104. Maybe that's not the B point. Maybe the real B point, folks, is this. Maybe the B point, let's make this chart here smaller again. There we go. Okay, maybe the real B point happens to be the June 2010 lows. So if we take a look at that A to B equals CD out here, what we're going to see is we're going to see getting to par in the euro. If we shorten this thing up here, you're going to see the 1-to-1 takes you to 1.07, folks. And I suspect that is where it wants to go. Now, if we take a look at patterns out here, this is over the course of the long haul out here. And if we take a look at patterns, let's simply go back to the lows back in 2005. November 2005, you're out at 116. And let's take a look at the expansion patterns out here. What you will see is the 1.272 butterfly expansion on the euro is going to take you right to par. Right to par, folks. That looks like where the euro is headed to over the long haul. So until, and if that happens, what we're going to see is we're absolutely going to see Tom's 825. Until the correlation, the directional correlation changes between a strong dollar and a strong U.S. market. But you can hear now, even when you take a look and listen to all the large firms explaining, that they've had a big push in the U.S. dollar. It's up about 11% over the prior quarter. And so in order for that to occur, that means they've got, just to keep sales on par, they'd have to increase sales by 11% out there. And, they're certainly struggling to do that. So that is on the euro. Let's go take a look at gold, see what she is doing out here. You've got gold trading below the 0.786 area. That last support was 1564. You're trading out at 1557. What's that set up? It sets up a move of a move. The move of a move will take you down to 1547. More likely, each time the gold has given it up at the highs, what it has done is it's moved down into the top of the downtrend channel. So where is that going to put gold at? It's probably an expansion. Easiest way is to take, we talk about ratios, how important ratios are. Let me go ahead and get rid of these lines just to make it easier for you to follow. And let's draw the expansion lines in here. So if we draw the expansion lines in here, and then let's go ahead and move up. The expansion, the 1.272 gets you down to 1526. It's probably in that 1526 range where gold would be, again, touching the top of that downtrend line out there. So that's where it looks like gold is headed to. Let's go see what high-host silver is doing out there. You've got silver trading out right now out at the 2655 area. You can see silver just slightly below the 0.786 area. The 0.786 of its last move up is 2660. So you're really right at that area. If silver gives it up here, let's get rid of this A to B equals CD that we've drawn here. And you can see that silver is still in its downtrend channel. So if we take a look at silver, let's go ahead and also, so silver looks like what it wants to do also is pull back to 2610. That would be the 100% move of a move. But it's inside this downtrend channel. So let's take a look at expansions of swing points. Let's take a look at Fibonacci expansions of swing points out here. And we take a look at that. What we've got here, folks, is you've got the 1.272, $25.47. So it looks like that is likely where silver would want to head to. You got the Dow off 104 points right now. The S&P's off 13. Let's go take a look at the 10-minute or the 5-minute charts on the ETFs out here. Let's see what kind of volume we're looking at. If there's just huge volume coming out of the balloon, nothing too large here. In fact, you see volume bars on the 5-minute chart on the diamonds, and the diamonds have been the real weak link out here. So you can see the volume bars not exactly picking up as prices moving down, but instead moving to the downside out here. If we take a look at the Qs. We've been talking about the Qs being weak, but I say the diamonds have actually been even weaker than that. Pretty steady action here in the Qs. Leading the Qs on the way down, you've got Apple down $4. And as I said, Google out with earnings after the bell today. You've got Google off $4.54 right now. So let's go take a look at the actual Google chart and see what Google is doing. See if there's any type of signals out here. GOOG is the ticker symbol there. Google trading out, or not GGOG. I have to learn how to type. There we go. Google trading out at 566.60 right now. Yesterday having some volume accelerate to the downside. Google coming into the swing point from June 28th. Makes a lot of sense. Google yesterday closing the gap. That swing point on June 28th here had 1.9 million shares. Yesterday, you were coming down into it with 3.4 million shares. What's that say as you're coming into a swing point with volume? It says you want to go down and test the bottom. And that bottom here, folks, is down at the 557.21 level. You're trading out right now at 566.67. If we pull this thing back here, let's put this on a weekly chart, see what kind of patterns we either have completing or what. So if we take a look at Google, we'll see that Google's trading into this bar from October 14th, 2011. It's inside there. That is on the weekly bar. That had 22 million shares. So far this week, only 7 million shares. If we take a look at A to B equals CD patterns on the weekly chart on the way down, and you, boy, oh boy, you know, this right here, it had a shooting star and an island reversal pattern. It did that, and I believe there were earnings the week of January 6th, 2012. You don't often see that on a weekly chart, folks, but if you were in Google and you saw that candle, and I'm going to go ahead and blow this up on the screen here because, you know, if it happens once, it'll happen again. Let me get rid of, there we go. So I'll blow this up for you. And this is the islands of island reversal out here, folks. You know, you got a shooting star. And what I mean by that, if you take a look at the week before, so we're talking December 30th, 2011, the high is 646.76. There's a gap between that high and the low of that shooting star. The low of the shooting star, 649.79. Then you take a look at the following week being January 13th, 2012, the high there is 647. 647 versus the low of the prior week, 649. You have a gap in price there. That created an island. And, you know, and that right there told you that you should be, that you were going to see lower price in Google. And so the very next trading session, January 13th, opens up at $646, and that was your signal to that you were going to see lower prices. You then had to determine what level you were in on this trade. Were you long-term? Were you short-term? You know, what was the length of term? Because it was just simply telling you were going to see lower price. You don't know how far lower you're going to see, but you know that that is a very important candle formation that is out there. Candles are leading indicators, folks. That's why you want to pay attention to them. If you take a look at just simply the A to B equals CD, Google's completed a 1-to-1 A to B equals CD on the way down. That price projection, 552.91. Google actually gets down to 556 the week of June 15th, 2012. So nothing else really that I see out here in Google other than it's just simply been in a consolidation pattern going back to July of 2009. Pretty interesting. July 2009. It is making some higher lows. It is making slightly higher highs as well. So that's what I would take a look at on the Google chart. Let's go take a look at some of these stocks here that are popping and dropping. I wanted to take a look at Merck because Merck has really been on fire here. MRK is the ticker symbol. MRK. Just like we've seen Walmart go to new highs. I believe we're seeing the same thing here with Merck. Merck gapping up today. Let me make sure I refresh this chart. No, it is refreshed. How about that? So what was the news on Merck out here? Let me just see if I see anything, folks. I don't see any news other than it looks like a upgrade. So this is a dangerous situation for Merck. Okay, it's not all-time highs, but still the stock is performing well. Let me put this on a weekly basis here for you. So if you take a look at the weekly chart and see what it's doing, it's up over the swing point. So that's what it was. The most recent swing point, January 2010, that high was 41.56. There was 83 million shares that week. So far this week, it has done 50 million shares. But if we take a look at the daily chart, this one you're going to want to write down on your pad of paper and look at. The reason being is that as we pull this back here, here is an absolute island out here. And so tomorrow, if for any reason, now you got to wait and see how today's candle completes. But what you do have on Merck here, folks, this is a bullish engulfing candle right here from 2 trading sessions ago, and you had confirmation yesterday. So very, very, very interesting stock chart out here. We're going to want to take a look at Merck tomorrow and see how that opens up. 877-927-6648, Dow off 93. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. And with it being Terrific Thursday, it's just not the Money Masters that follows this show. Today we've got we don't have commercial-free uninterrupted. What we do have is following the Money Masters show, we've got Kate Stalter from 11 to 12, Larry Pesavento doing the Futures Hour from 12 to 1, Daryl Martin doing the Diagnostic Trading Hour from 1 to 2. Today, and just through July, on Tuesdays and Thursdays, we have the open time slot. David will complete that and go 5. David White will complete that and go 5 days a week from 2 to 3. Right now it's just Monday, Wednesdays, and Fridays. And then the permanent warm-up band for the Tom O'Brien Show. Ken Shreve from 3 to 4, and Tom, of course, from 4 to 6. Dow trading off 90 points right now. Let's go take a look at the second dog in the hunt here. To the upside, you've got AutoZone. So we know AutoZone having some real troubles out here. I might have this chart somewhere buried in here. AZO is the ticker symbol if you're going to go ahead and pull it up while you're following along on the home game. I don't see it, so let's go ahead and put it up here on the screen. We know AZO, we know all of the auto parts stores having some real trouble. You're seeing a little bounce here in AutoZone. Let's see if there's anything behind this move and what it is actually doing. Now, AutoZone moved down into the swing point low of May 23rd. That swing point low was 355.06. That had 906,000 shares. You gap down into it with 2.1 million shares on June 27th. That now is the, and it closed back up above it. So you didn't close back, but when I say above it, I'm referring to the B swing point of an A to B equals CD down. So that May 23rd looks like AutoZone may just simply be in a little bit of a consolidation pattern. It's going to need some real volume to bust out the low from June 27th, because that now is your next swing point here on the way down. Yesterday, you had AutoZone close the gap. That gap was from the June 26th area. The low there was 366.84. Yesterday, you did 546,000 shares going into 528. Today, so far, you've done 104,000 shares. Not really too bad when you've only been trading for 26 minutes. So that is in AutoZone. Where would this thing possibly head up to? Well, it would head up into the C point. It would head up into the swing point going back to June 7th. That swing point only has 429,000 shares. So that's got 429 at the swing point. I don't see anything else on the way down. Well, okay, I take that back. No, looking for on the way down. Now, it looks like that's where AutoZone is trying to get back up to. It's getting up, once you get up to the 383 to 391, that is the June 7th time frame. If we take a look at what else, you got Priceline down $1.80. Let me switch over here, take a look at the Dow and the IBD chart. So in the Dow, everything is red with the exception of McDonald's, MCD. They're up 14 cents. Procter & Gamble up 2 1/4. Johnson & Johnson up $1.66. And Merck is up, or else my chart was all messed up. I'm going to have to take a look at that again. And so because Merck traded out at 42.89. So where is, Merck is, okay, there we go. It's back. Merck is up $1.67. And Chevron is also up 58 cents. If we take a look at the IBD out here, see if there's anything that is green in the IBD. Wow. Come on. It's got to be something green. No green. That tells you something, folks. Now, I know I haven't updated my IBD 50 here for maybe a week or so, but I can tell you as the IBD 50 from last week, there's not a single green stock. That is, that's very, very interesting out there. Folks, stay tuned. Tom and I will be up next. Then Kate Stalter, Larry Pesavento. It's been great to be with you. Have a terrific Thursday. If you're heading out, I will see you tomorrow at 9-ish sharp. Take care, folks.